Good afternoon. Hello, hello.
Hello.
What up? What up?
The market.
What's up? What up? Is anybody there?
The market's
Can anybody
Can
hear?
anybody
Can
hear?
anybody hear me? No one's saying anything. I'm over here acting a fool.
Let's go Mets!
There's no camera on. Josh just runs over. Josh is dressed like a 7-year-old going to play his little
an Adam Sandler movie.
baseball game, but he's on the Mets.
Gotta support the team.
Oh man, I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINReciproc. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is still the same. It's been the same. It's been the same. The same. I'm not really a baseball fan. If I'm going to choose a team, it's got to be the Yankees.
Bro, I'm taking you to the Mets game.
the truth is, I've got more Yankees hats than I can name players in the MLB. I have one Yankee hat. I can't name a single player in the MLB anymore. But I'll tell you who my favorite Met is. I got two, because I met them both once. John Franco.
Okay.
He was a pitcher. You know him?
Yeah, wasn't he like indicted for like rape or something?
I hope not. And Charlie O'Brien.
He definitely did retire, Brett. Charlie O'Brien also.
He was a catcher. Whew. All right. Let's talk about stocks. All right. So guess what? We had a green day today. Spies up point.
Exactly, Romel. I knew he was.
Franco supplied tickets to members of the Bonanno crime family. And on one occasion, Canadian organized crime figures, according to the FBI documents made public in 2004. There was no suggestion that he committed any crimes, but his behavior was violated. That's not that bad.
No, it's not bad.
It's not that bad. I met him, though.
Did he give you tickets?
No. No, he didn't give me any tickets. All right. Spies green. Qs, I think, closed green as well, but now they ticked down to flat. Qs were very, very small green by the end of the day, and that was because we had a nice uptick into the close. And the IWM finished up 2%. Max Payne. TLT was up. The dollar was down. Gold was up. Bitcoin was up bigly. Gotta look at Ethereum. Ethereum up 4.5%. Ethereum is the future. Apparently. What did I miss? Oil down 0.75%. No one cares. All right. Yeah, so, I said it already, and we can look at charts and all that fun stuff, but this market is now transferring into a period of absolute and utter maximum pain. We had been looking at data, and I think an afternoon meeting, my sense of time, either Monday or the end of last week, where we were looking at the data. We spend so much time looking at systematic positioning. I love looking at the systematic positioning because you can model it, and you can really know like when they have to buy, when they have to sell, what prices they have to buy and sell, based on what outcomes they have to buy and sell. Understanding what the discretionary like long short community is going to do is much more difficult, because it's by nature discretionary, right? They are making decisions based on a ton of different factors, fundamental and otherwise, and it can't be future modeled in the same way that the systematics can. But what we started to see early this week, late last week, is that the systematic community is getting pretty deep in the pool at this point. There is still an outcome where they can actually continue to buy a bit, especially if realized vol stays low. But we are now also at a point where the systematic community could really become sellers as well. I would even argue that the risk is to the downside from that systematic community at this point, and that's only going to get worse over time. But the more discretionary long-short community, which that's a lot of money there, is not anywhere near being all in the pool. They're very, very neutral right now. They're very much at like the midpoint of their positioning. So there's room for them to buy further. But what we also saw at the end of last week and the beginning of this week, and Billy D, I don't know if he's listening to the afternoon meeting, really like foreshadowed this like the day before we started to see this IWM squeeze, where he posted some data, which, forgive me, I already forget exactly what the numbers are, that showed that basically like end of July through the beginning of August that those fund managers basically got massively short the IWM. And I wrote another research report somewhere, I don't even remember where anymore, I don't remember, I would source it if I could remember, but I which one it was. But I read another research report, like, I think yesterday morning, that basically was like, yeah, it was the same thing, fund managers are massively short the Russell, but it said that they're kind of doing it as like a hedge to their longs. But their longs are in the Q names, they're in the AI names, they're in very much NVIDIA, right? We know, per that Goldman Sachs note a few weeks ago, Goldman described NVIDIA as a 10 out of 10 in terms of long positioning, which doesn't mean that it can't go up. It can, but a lot of people own it. And I think that Palantir is a very similar one as well. So all of a sudden, yesterday, today, it really seems like we turned into the ultimate maximum pain trade for these long-short managers who are just getting blown up to smithereens in these shorts in the Russell. The Russell, I think, was up, correct me if I'm wrong on the number, 3% yesterday? Might have been 2.5%. Something huge. The Russell's up another 2% today. So we're looking at like a 5% move in the IWM in 2 days. At the same time, you're still seeing a lot of these individual stocks that are really squeezing. Take off once again. I just type up yesterday 2.97%, Ryan, thank you. So 5% in 2 days from the IWM. You got Lemonade up 10% today on a really solid looking day 3, and you're just squeezing a lot of names again. ATNF was one that was going crazy today. We saw like this Open's been trying to run again a little bit. I know it had a negative day today, but they are just, and XBI I think broke out. Yeah, XBI is breaking out. They are just massacring these long short funds. And at the same time as that's happening on the IWM, NVIDIA, it hasn't broken down because it's pretty much impossible for anything to break down. It once again held support, but NVIDIA did finish down a percentage point today. Qs are up small on the day. The IWM is up 2% on the day. The RSP is up 1.5% on the day. But NVIDIA, the ultimate leader, is negative on the day. It's down 1%. And Palantir, which we know is also at this point an insanely parabolic chart and an extremely crowded trade as well, is down 1.5%. So they're taking it from both sides. They're getting squeezed on those shorts, and they're getting hurt a little bit on those longs. There's a potential that even some of the weakness in NVIDIA and Palantir is happening because the IWM is squeezing, and it's forcing more of like a de-risking across the board, where it's like, all right, we got to get out of these shorts, so we also need to liquidate some of our long holdings as well to protect ourselves or readjust things. Yet the market can't seem to break support in any way, shape, or form. The Qs today really established like this really strong intraday support around this like 179. We watched it get tested at 11:15. We watched it get tested at 12:50. We saw a headline come out at 2:35 today that moved kind of Google and Apple real briefly, but it caused the Qs to tail down perfectly to 579. Wow. If you switch over to looking at NVIDIA, as much as I'm talking about the relative weakness in NVIDIA as something to note, the stock certainly hasn't broken down. 180 is the huge downside spot in NVIDIA. It ticked below it today, it ticked below it yesterday, it ticked into it the day before, but it can't break it. It's still even with that, supposed weakness, can't actually break support, can't get below the ADMA, can't get below its trend. But it's certainly notable that it can't continue either. And at the end of the day here, when you look at the SPYs, you have a really tight doji day. And Pat was chatting into the close about technical analysis on what today's candle means, and it could be an evening star doji. It could be what we jokingly around call a doji burrito. I think the more technical term of that is a doji sandwich. So tomorrow's day is actually going to take on a lot of technical importance. We do have the PPI tomorrow. PPI is not as market moving as CPI is as a rule, though sometimes it can give an okay move. But if we were to get a big downside sell day, that would be like an evening star topping pattern. And if we had a big, if we get above today's high tomorrow, then it's more like that bullish doji sandwich pattern of just, we had a little bit of a rest today, buyers held support all day, nothing broke support, and then those buyers are just continuing us higher tomorrow. So we will see how that plays out. But as far as I'm concerned, this market is still in full-on bull mode until and unless I can see a failed breakout. And that's got a lower, that's the lower probability situation. Does not mean it's impossible. I could point to one main factor I think that could make it happen. But right now, the SPYs are in full-on bull mode as long as they're above 640, and I would argue really 636. 636 was the starting point of the CPI yesterday, and if you were to lose 636, you're losing the starting point of the CPI, you're also losing the ADMA on the daily chart. If you lose 640, technically you're losing the breakout level, but the ADMA hasn't caught it to confirm it yet, so I wouldn't necessarily think that means that we're done. But we got to get below 640 to 636 to even be considering this market to be bearish. Otherwise, technically here, we are in full-on bull mode, though it is notable that our biggest traditional leaders, Nvidia and Palantir, have not been acting the same the last couple of days, yet they still cannot break down. Talking a little bit more about today's trading session, I think we had like really good calls today. Personally, my trading was super on point. Hearkening back to the morning meeting, and this is why. So, in the morning meeting, obviously, all I can do in a morning meeting is the best I have with the information I have at the time. And then I recognize that the information evolves as the price action evolves throughout the day, and you have to be a little bit flexible. So we gapped up this morning, but I felt that we gapped up very solidly into no man's land. We gapped up into an area where it's not a good idea to buy. You're buying a day two gap up with like, $7 of extension off of the ADMA on the SPYs and like $9 of extension off the ADMA on the Qs. That is not a setup that I want to buy. It's way too chasey for me personally. Maybe some more scalpy type of day traders can put on some momentum style longs where they can make a few bucks for themselves. And it's not to say that the market can't go higher. It absolutely can. It's to say that you don't have a good risk reward buying a day two gap. But you guys hear me say it with individual stocks all the time. Whenever someone asks me to take a look at a name and it had a really big day yesterday, you almost always hear me say the same thing if it's the second day, which is I can't do anything with this chart. It's too early to short it. It's too late to buy it. You got a bad risk reward on both sides. And it was the same thing here at the market. Too late to buy, but the short, we're not at extreme extension off of the ADMA for the SPYs and the Qs. And again, it was only like a day two. If you give me like a strong close today, which didn't really happen, followed by a gap up and opening strong move tomorrow, that puts us into a day three where then I see both the SPYs and the Qs, both of them are in like $10 to $12 worth of extension, and the IWM is kind of at $7 plus of extension off the ADMA on the daily. Then I can be like, all right, guys, day three here, we can look for at least some cute extension shorts to make a few dollars for ourselves. So kind of big picture on the market, I felt like there wasn't much to do. Small picture on the market, though, we had a decent enough of a gap that I felt it gave us a trade. So whenever we have large gaps, and this is why I love gaps in the market, and I don't want this market to go to 24-hour trading, which is probably going to happen, gaps give me a really strong advantage. So on a morning like this morning, I'm seeing that big gap up. What do I know it's going to do? I know that that gap up is going to create opening upside extension. Opening upside extension is something I could take advantage of on a small time frame for a day trade. And then maybe that day trade can turn into something more. So basically the game plan for this morning was, big picture, I don't think we can do much here, but small picture, because of the gap up, I think we can look for an opportunity to short. Sometimes the way that happens is the very first 5-minute candle of the day sells down hard, and you can just be short versus that high of that first candle. Or sometimes you see like a little bit of an opening squeeze because the gap up is forcing additional buying, and you wait for that squeeze to go, for 15 to 30 minutes. Then you find kind of maybe a topping tail or a shooting star candle or something like that to short versus to try to take advantage of the upside extension that has now occurred because of a combination of a gap and opening squeeze. And today we had that second situation. To start with, we called out a Q short off of the second candle of the day, which I think was a damn good call. It's the high of the day. Again, this is not something you should be going max BP on. Big picture, because we want to start big picture down to small picture. Big picture, in my opinion, we did not have enough extension here to really be like excited about this short for anything more than a cute day trade. But small picture, all right, second candle here, we're seeing some weakness, a little bit of a push through failure. You can be short versus that high, but honestly, all you're really looking for is a move into the equilibrium zone on the 5-minute. Honestly, with how strong the market's been, really just a move to the 80 EMA on the 5-minute. If not, maybe you can get a little bit more out of it, maybe the midpoint between the 8 and 21 EMA, maybe even the 21 EMA itself. And that's all you're looking for. So, worked a little bit, then we got a lower high, then we had a deeper pull into the 80 EMA. And honestly, by the time the Qs got to 582, if you took that opening short, you probably should have been out of, I honestly think, 75% of the position. Even if you're out of more than that, I wouldn't fault you for it. And we can't look at this and say, with hindsight being 2020, well, it went all the way down and eventually it went negative, I should have kept more. That is not the right move for this market environment. We're just too strong. So strategically, you can put that short on to take advantage of the small time frame extension, but you're getting out of a large percentage of it by the time you get to the 80 EMA. And then I'm a big believer in having rules in place where retracements can become reversals. I do love the idea of holding at least a small percentage of your position to get a little bit of a bigger move, because that's how you can really maximize reward on lower probability situations. So if you kept 25, even 10% of that opening short in the Qs, then you ended up getting a decent move. And honestly, you closed enough in the money off that trade where you could swing it short. You'll probably get stopped out tomorrow because that's just the name of the game recently. But I wouldn't hate, there's a potential there where you still have 10% of your short on tonight that you're keeping overnight. What's the worst that happens? We gap up tomorrow, PPI is not bad, you're getting stopped out at today's high, you gave back 10% of your position, it's not a big deal. But what's the better situation is maybe you get a full pullback to the 80 EMA on the daily, and then all of a sudden that small amount of risk that you put on that trade actually turns into really big reward even on a small percentage of the position. So we called that out for the Qs, and then the SPYs, which continued partially because the IWM was strong and partially because the Dow was very strong off the open. The SPYs, we actually called this high out perfectly as well at 950. 950, when you run like this after a gap up in the beginning of the day, especially without there being new significant news, it's almost impossible for this to be sustained. So by the time you get to 950 and I'm seeing 5 pretty decent green candles in a row that just made the extension from the gap up even significantly more extended, I'm itching to look for any signal to be able to short it. This doji here is a very small doji. You can't even really call it a topping tail on that. But for me, it was still enough given the time of the day, and this is why understanding time of day with your trades is really important. Given the time of the day, and the degree of extension, it's like, all right, I think you could go short versus this high. And then that worked out pretty well. I would say the exact same thing as far as your game plan with the SPYs as I just said with the Qs. You probably should have been out of 75% of your position by the end of the 10 a.m. candle. Maybe even a little bit more than that, maybe a little bit less if you're super greedy and you want a little bit deeper of a price correction in its equilibrium zone. But with the strength that this market has been showing, the squeeze in the IWM, it's hard to be, a big picture bear. SPYs just broke out yesterday. We're on a day 2 here, but queued extension short, book most of your profit by the ADMA, hold a little bit more maybe for a deeper pull on equilibrium, and then same deal, hold 10, 25% of your position in case this becomes something more. And unlike the Qs, this bounced back enough into the close that you probably don't feel as comfortable swinging that small position. Maybe you could if you're small enough and you're like, I'm a big believer, I always have been, in risking money that I've already made in order to make more. So that really, I heavily rely on that approach. But if you're uncomfortable because this is too close to that opening high and you got a big bounce back in the close and you liquidate the position in the close, that's fine. The Qs, I think, are potentially a little bit more swingable to the short side if you did have that good execution. And then, we were really focused on NVIDIA today with that 180. We called out a couple shorts in this on the way down. I remember in particular we called out the short off of the 10:20 a.m. candle, which worked out pretty well. But NVIDIA once again gave a save here below 180 and closed pretty well. So we'll see if this NVIDIA, it's the same levels, by the way, in NVIDIA that I've been saying every morning. It's the 180 on the downside, it's 183.50 to 184 on the upside. And we once again had a failure, excuse me, we had a failure of resistance today. In the beginning of the day, we got into that 183.50 to 184. No, not a failure. We held resistance. And then we also held support, again, all within the same day. So we'll see how that one plays out. We had some pretty decent callouts there. It's some pretty decent callouts, I think, in pound here on the way down as well. So I think when all said and done, it was a pretty good day trading day with some pretty good callouts, despite the fact that the more macro game plan of where we gapped up to said you should exercise caution. There were good day trades there that you're probably not going max risk on, but definitely you could make a living for yourself off those trades on a day that is otherwise a little bit more ambiguous and difficult. So, circling back to the big picture here on the market, we have a little bit of a doji. Is it an evening star? Is it a doji sandwich? We'll see. It seems like this IWM is in full-on max pain mode here. The IWM did close at extreme extension as far as I view it. So I think tomorrow, if you were to get like a big gap up again in the IWM, you actually could maybe look to short it a little bit. But be careful because we know people are getting squeezed in that thing. So that's all that I got. I'm happy to answer any questions that anybody may have, like always. Few things here in the YouTube, no problem, Scott. From Daddy Trades, I took a long on. Josh likes your name. I don't know. I think Josh might have went to the Wacky Tobacco store a little early today. Anyway, from Daddy Trades, I took a long in CRM today off of the 20 SMA. Let's look at Salesforce on the daily. Okay. I don't have a 20 on this chart. I probably should. There's also a really big support into this 230 that it tailed through, but then tailed through yesterday and then got back above. I like, by the way, before I read the rest of what you're saying, I like when you get an extension doji like this. So this is, multiple days down, a lot of extension from the 8, a lot of extension from the 21. You get the hammer on increasing volume. But I like when the next day you either get a gap down or a pullback. This looks like it gave a pullback intraday that lets you actually get decent pricing versus the previous day's low. A lot of times when you get a doji like this, if you don't have it from the doji day, then you don't get it. Because, you know, the next day it gaps up or whatever, and then it becomes a bad risk reward to be buying, let's say, 237 versus yesterday's low, with the ADMA being your main target only being $4 higher than that. That's a bad risk reward. But if you were watching this, if it was on your radar, if you knew that there was an extension hammer on increased volume yesterday, and you got the pullback or you got the gap down, and then you could get stock within yesterday's range versus yesterday's low, that's a trade that I like. It tends to give really good risk reward. So I like the idea of looking for CRM, which I think is a good company, but that doesn't matter. It's been struggling recently, for the bounce back trade. I think could easily bounce back to the ADMA on the daily. I think that 245, 246 is a fair target on this. But anyway, you took it long. It looks like the market was selling names at near all-time highs, say like Meta, Microsoft, and buying names like FTNT, PanW, CRM, and PayPal. Yeah, Max Payne. I've noticed the easiest trade on these gap ups last 2 weeks is to wait for a failed new high in the first 10 to 20 minutes off the open, and then short the weakest of the IWMQ SPYs and cover at the gap fill. Yeah, you know, similar but different concept as to kind of what I was describing earlier on the 5-minute chart. I'm really waiting for that, you know, signal to be able to come in. You're looking for a failed new high, so similar but different concept. You're talking about looking for the full gap fill. I love that. Those gap fills have definitely been acting as support in this really strong market. When we gap up and sell down, I would argue that the market's been so strong that it almost sounds greedy to wait for the full gap fill. Maybe keep a percentage for it, but otherwise, you know, be booking profit into that ADMA, into the space between the 8 and 21 like I was just talking about, in case you can't even fully get that. And then your follow-up here, if Palantir breaks above 190, breaks back below and can't reclaim it, I am full porting January 2026 180 puts and holding until the 161 spot 40 gap fill. Yeah, we'll see. You know, Palantir to me has been really interesting. 2 days ago it was interesting because we got through last week's options expiration. Last week's options expiration was important for Palantir because it was the weekly OPEX of the earnings report, and then after that the bottom kind of fell out on it. Yesterday was a little bit stronger, but the market was a monster. So it almost seemed like, to me it seemed like both Palantir and Nvidia yesterday went up almost in spite of themselves because of the market. So today I thought it was going to be a really interesting session in Palantir. I talked about it in the morning meeting. Because today it really had the chance to come in with that upside momentum, right? The stock was gapping up to a new all-time high, and this is Palantir that we're talking about here, and you do have a bull flag pattern that's on the daily chart. With that said, the ADMA is not caught up to the base of the bull flag, and you hear me say it all the time. On any time frame that you're looking at, 5-minute chart, daily chart, whatever, if you're looking at a bull flag and the ADMA is not trading at the price of the base of the bull flag, and it tries to break out, you have a very high probability of failure on that pattern. I genuinely do not like buying bull flags when the ADMA is not caught up to that base. If the ADMA caught up to base, then it becomes very textbook for breakout continuation. But again, this is Palantir that we're talking about. If there's ever going to be a stock that doesn't need the ADMA to catch up to the base of the flag to give continuation, this is the one. And with a really strong market, the stock is gapping up to new all-time highs. Yesterday's tail, by the way, on this chart is fake. It didn't actually get up to 190. It's gapping up to new all-time highs, and this thing had the potential of a momentum gap and go. And I was watching it really closely off the open around this 189, and it failed this pattern to the downside. Okay, not the end of the world. Price correcting to the ADMA, along with the market price correcting down to the ADMA. But then it showed relative weakness and it actually gave a full-on failure. The buyers did not show up in Palantir today. And that's interesting because the buyers always show up in Palantir. But it seems like the most heavily owned longs are getting tired, right? We're seeing that with Palantir. We're seeing that with Nvidia. I don't know if that can lead to breakdowns or not. But if you look at this daily chart of Palantir, this is one of the most parabolic charts for a real stock, a real company that I've ever seen in my career. It's at the point where, I mean, it's kind of absurd, actually. There's no way that this can continue its momentum for too much longer. It can continue it, though. A stock can remain irrational for longer than you can remain solvent. 200's not impossible. 205's not impossible. But if you're really trying to espouse the bull case on Palantir for the momentum continuation, you wanted it to go today. They're squeezing a lot of these meme type of stocks right now. They should be able to squeeze this also. I think that the fact that they failed it, the fact that they closed it on lows is notable. The real test happens, though, when it's no longer extended. And it is still extended, right? The ADMA has not caught up yet. It has not touched or tested the ADMA since its earnings report. So it's been 7 trading sessions now and hasn't touched that ADMA on the daily chart. So, we'll see. Definitely interesting to see Palantir and NVIDIA not participating. Can they actually break down? That is the really big ultimate question right now. So appreciate the commentary. I like the idea of looking for the gap fill. I can tell you that. From Dennis, another good trade that is super simple for anyone to adopt is when you get failures that lead to downtrend action, is looking to reshort the 21 EMA, especially if it broke and didn't retest yet. Get a break and fail of the 21 for trend continuation. Robel and me took this one in Palantir today. You look for near lows or maybe sometimes new lows. One of the easiest trades to learn, in my opinion. You just need to feel for under what circumstances is the higher probability kind of play. This way you can participate even if you miss the top. Yeah, I love what Dennis is saying here. Absolutely love it. In most environments, we've been joking around, except like not really joking, for seemingly months now, that this market has not rewarded you at all for pushing downside. Like in a normal market, we called him out I know I was calling him out in NVIDIA today. I remember Billy D was trying to call him out in NVIDIA yesterday when NVIDIA was weak at the open as well. Like, this market, a normal environment, exactly what Dennis is talking about is the right way to approach it. Instead of trying to short absolute tops and things all the time, let them fail, short them when the trend has changed, short them on the way down, short them for continuation, short the pivot highs when they come in. That's what I was doing when I called out the NVIDIA short off the 1020 high here. It's not the high of the day. It's not off 184 resistance. And I even cautioned that, if you take the trade, I like it, but you're shorting right into support on the daily, which is usually not a good idea for the strongest stock in the world. But if we ever get a market environment where the market can actually go down for more than like 15 minutes, that's the type of trade that you really want to be focused on. So you don't have to catch the absolute top. You can short weakness. You just need an environment where weakness pays, and we haven't really had that. But we're starting to see it a little bit in a couple of these stocks. So, yeah, love the idea there. From TT, would the inverse bear flag ADMA catch-up be true also? Yes, it is true also. Or do you still say time is bullish, reducing the probability? Well, so it depends on multiple time frames. If you're looking at a 5-minute bear flag where the ADMA is catching up but the daily chart super bullish, then in that case time is a bull's friend and the stock can work its way higher off that point and you can get a failed bear flag. But very generally speaking, if you're looking at like a true bear flag in a downtrending stock, time is your friend in terms of it being additionally bearish. Going sideways, letting that ADMA catch up, just means that that's your higher probability for continuation to the downside on some sort of a bear flag pattern. Appreciate the question there, TT.
Great question.
Great question. Whew. All right, well, Josh has taken me to see the New York Mets at Shea Stadium.
Citi Field.
I just found out this morning that it's not Shea Stadium anymore. I'm kind of disappointed by that. Citi Field sounds so corporate.
Shea Stadium, need about 20 minutes for me to explain to Derrick how the game of baseball is played and works.
I know the rules of baseball.
Derrick played Little League.
I never played Little League.
He beat up kids in Little League.
I did go to a Little League game for my neighbor in Idaho this year. And the kid was, I don't know, super young, like, I don't know, first or second grade or something like that.
Yeah, it's like mine.
And let me tell you what,
you lost your mind.
What I learned is if I ever have kids, that kid is not playing baseball.
My kids hate
That-
baseball and don't blame me for putting them through.
I watched the entire game, and one kid hit the ball one time.
Yes. That's the thing at that age.
One kid hit the ball.
The funnier thing
At-
is T-ball.
at
When
what
they hit
time?
off the tee when they're
Yeah.
a little younger, and
And then
it
they run the
dribbles.
wrong way.
And then they
Run the wrong way.
To get food.
Like
Yeah.
at least if they're playing, I don't know, soccer or something, they're running around like there's more going on. Man, that was brutal watching
You have to
like
wait till they get to
first
about
grade
12 years
baseball.
old before they really start understanding the game and playing it at any level. Other than that, it's just it was painful.
Yeah.
Painful. But you know what's cool? Like all of us were dads. All dads. I hung out.
You guys were all
with
hanging
friends,
out. Yeah,
go out
yeah,
to
yeah.
the bar.
Yeah.
You know, had backyard parties.
Yeah.
Oh yeah, that's a good. This kid is TT asks a good question. The game you watched, did the adult coach pitch to the
No.
kids, or were the kids actually?
The kids were pitching.
Yeah, so that at that young age, that gets really boring, really long, really quick.
Yeah.
At least coach pitch, they
Yeah,
hit a little bit.
What's the famous umpire? You know, who's the guy who made all the bad calls? Billy, help me out. Who's the guy retired that made all those really bad calls?
I
But
forget his
anyway,
name.
there was an umpire that in major leagues and that just retired and he made all that. So you're absolutely right. At that level, our umpires used to have a strike zone that was like this.
Yeah.
Because the little kids couldn't hit it, and they would say to us as coaches, they'd say, "Listen, if they get it relatively close, I'm
It's a
calling a
strike."
strike because I ain't gonna sit here all fucking night."
And yes, that was our
Yes, that was our
head
chief
honcho
of
that
compliance
just cursed on
using
the radio.
using
It's a
word.
profane language.
Someone find this man. I'll give you a warning. First time you get a warning.
Tom's gonna give me one.
Tom's gonna give you a warning.
It's coming
Yeah.
out of your mouth.
Yes, it is coming out of me. I'm gonna get the warning.
I know,
Michael.
so we're gonna get really drunk, is what's really gonna happen.
Michael
with
Anthony
Facebook.
Murphy is worried that we're gonna get drunk and have a Coldplay Jumbotron moment.
Too late,
Oh.
buddy. We already had that. We've been
Oh.
there, done that.
I would pay for that.
Been there, done that.
Oh man, I love it, Dennis. That's awesome. That's where I started. I started with Kempo.
So you're gonna explain the rules to him?
I know the rules. I know how baseball works. I know the rules.
I know you know.
I know how baseball works. I just don't really follow any sports anymore, to be honest.
Look at this misprint. 486 might be on the cues. It just printed 486. Might be an Elvis.
Josh has been sneaking some whiskey or something like that in the bathroom today. He's been acting a little
486.54. We just had a dart pool print. I was
little
just
special.
up a lot of money.
5:20, 5:30.
All right.
5:20, 5:30.
Have a great night, everybody. We'll see you all
Let's see
tomorrow.
what it says now. Parking lot G.
G Unit.